Well, I think the even bigger picture, and one that makes all the other smaller picture, including the business cycle, clearer to everyone, is the fact that we are in the early stages of what might one day be called World War III, because the world is in conflict pretty much everywhere you look. And that's certainly true with our quasi war in the Ukraine and Russia. And it's very obviously true with the situation in the Middle East, where we're battling with Israel, the state of Iran. But really, the conflict is domestically, created by the United States to a large extent, and it's focused on oil right now.
What if today's biggest financial risks aren't separate stories, but part of the same trend? Rising debt, global conflict, a fragile bond market, a hidden credit bubble, record central bank gold buy, and an AI boom with consequences few people are discussing. Economist Mark Thornton believes these developments are connected, and if he's right, investors may be far less prepared than they think.
Now, of course, built into that scenario is the business cycle. And the business cycle is really driven by the behavior of central banks, which have been inflating, keeping interest rates, real interest rates, very, very low for a very, very long period of time. And we have stock markets, particularly in the United States, at significant all-time highs and historic all-time highs as far as overvaluation. And that manipulation by our central bank, and it's true for other central banks as well, everybody's inflating. There's no question about that. But, below the surface, on the surface, you see our gross domestic product continuing to rise, our aggregate unemployment rate still in a normal range, and stock markets at or near all-time highs. So on the surface, it sounds fine and good, but below the surface, you have two-thirds of American households which are experiencing negative increases or real decreases in their purchasing power. And so you have two-thirds of Americans who are suffering from one degree to another from higher and higher prices in the economy. And, that's been a continuing process now for several years, actually. Some of it's being covered up by the internal activities of the central bank. Some of it's being covered up by the statistics that they use, but there's no question, given the fact that consumer sentiment measures and polls in the United States are at the lowest level they've ever been since they started taking those polls. And then we look at the real inflation-adjusted wage rates in the United States, not the overall income, which includes assets and dividends and wealth producing forms of income, profits. But if we look at just wage rates and adjust them for inflation, that's falling. So, it's a bifurcated, divided economy where the vast majority are doing poor, and their prospects for improvement are diminishing, certainly. The wealthy are, riding high on the wave of the stock markets, as well as other assets that they are the primary holders for. So, it's, and then, of course, what happens to all of the macro moving pieces when that stock market reverses itself.
Thornton argues that years of low interest rates have pushed asset prices higher, while many households struggle with declining purchasing power. His concern is that the system appears stable on the surface, but growing financial stress may be building underneath.
At your basic point, I think you're absolutely correct that fundamentally all of these activities and all of these feelings out there point to a general distrust. And in opinion polls, again, Americans do not trust their political institutions. They do not trust Congress and the political parties. 2/3 of Americans are actively opposed to our government right now. And of the remaining third, there's really only a small sliver that positively support the American government. So, and of course, a lot of those people went out of their way in the most recent polling to indicate that inflation is enemy number one. It's really harming their households and their budgets and their family life. They feel inflation as a tax that's building every paycheck and taking more and more of their purchasing power. So it's a general distrust. And then once you get that level of distrust up higher in the income and wealth categories of the population, the people who are, bondholders, who are investing money in companies and in government debt around the world. I mean, there's one country after another seems to be slipping from favor of this class. And that would certainly include Britain and Japan and many other countries, but it's happening here in the United States because we're stretching the limits of trust with investors, and that's really showing up in the government bond market. The 10-year U.S. government bond is in a recent high level, which means the prices of those bonds are falling. In the 30-year government bond, which, by the way, they're not really issuing much in the way of new long 30-year government bonds, and yet, despite the decreasing supply, the price of those bonds have been falling, and which is very atypical. And of course, the interest rate has risen. And if you look at a chart of the interest rate on the 30-year U.S. government bond, it's actually broken above a very high level of, I think the ceiling was over the last several years was about 5%, and it's recently broken above those levels, which is a very bad sign. It's a clear sign, I should say, of the level of distrust.
Tell you that I am.
Oh, yes. I mean, I explored private credit, private equity, actually, as the next black swan a while back on my own podcast. And this form of financing, very similar to junk bonds, and it emerged in the flood of credit that came into the market during and after COVID. And ultimately, the market's going to find ways of putting the Fed's funny money to work. And that's what emerged in 2022 through 2025. And it was a boom of tremendous expansion of credit and, getting into the financial books of so many different companies and so many different financial entities. And it was only a matter of time that the results of this type of financing would start to show up. And that happened at the end of 2025, when all of a sudden, private equity couldn't get access to money to make their deals. The deals started souring, and private credit was brought in as a way of, funneling new funds into this apparatus. And then at the end of 2025, the Fed had to start quantitative easing.
Thornton believes weakening confidence in government debt and growing stress in private credit could become closely connected if market conditions worsen.
Well, it harkens back to my first statement about the status of war in the global economy, that we're inching and moving in that direction around the globe. And I think that the countries involved, which would include, of course, Russia and Eastern Europe and the Middle East and all of the BRICS countries who have been aiming at an alternative rather than a monopolized global monetary system by the U.S. So they've been at it for a long time, but now you add these other conditions of global economic and military conflict, which has really greatly exacerbated the situation. And admittedly, right now it's quasi wars, and the U.S. Censoring or censuring various countries and their holdings and so forth. But ultimately, gold is money, and it works under all conditions, including war. Whereas fiat paper money doesn't work at all, especially for the secondary and tertiary currencies. They lose almost all of their value in a global conflict. So it's not surprising that nations, governments, are moving in the direction of holding gold, a little bit of silver, more silver as well these days, in the countries that that center around the BRICS countries, so China, Brazil, Russia, India, and so forth, but also Turkey and Poland and other places that are closer and better informed about the nature of the conflict. Now, in Western Europe and in the United States, all of those countries and nations, the governments and the regular people seem to be completely out to lunch as far as it being informed of the status of this situation. And Americans in particular, because we've had a dominating currency, they seem completely unaware. So Americans are not really, and Canadians and Western Europeans are not really buying gold and silver to protect their wealth under what could be very radically different environment moving forward, whereas countries that have a better knowledge about the effects of inflation and the status of the current situation, such as Japan, China, India, Turkey, and so forth, not only are those nations and their central banks buying gold and silver, but the people themselves are also heavily invested.
Thornton argues that many governments are increasing gold holdings because they see it as a durable monetary asset during periods of geopolitical and financial uncertainty. This is his interpretation of current central bank behavior.
One of the things that most people don't realize is that a lot of AI revenue is dependent on government contracts to keep tabs on, to spy on, and to control the American population. So those are things that the government is touting in terms of AI is going to help us with jobs and productivity and so on and so forth. But I think the bulk of it is going to help the government keep tabs on us, make sure we're paying our taxes, make sure we're not doing negative things about the government or opposing the government, just like they do in China, where they basically suppress people's privacy and they suppress people's civil rights, their natural rights, their human rights on a very large scale. And I think that's why there's such a mad rush to get this done as soon as possible.
Thornton argues that government demand, not just private sector innovation, could become a major driver of AI development. He suggests AI may increasingly be used for surveillance and administrative functions rather than productivity alone. This is one of the interview's most controversial opinions and is presented as his perspective.
Well, I'm very optimistic about the future, Andy, despite everything that I said. I mean, because I deal mostly with young people and their education, I could see that most young adults have completely detached themselves from the major political parties and even the political process. So they know that that is not the wave of the future or a way to make themselves or society better. I've seen the American population turn against their government, oppose the government, and they do not support the government in opinion polling. Probably 10 times as many Americans now oppose what the government is doing compared to when I was in college. And also they've disconnected themselves with the mainstream media, and they're more likely to be watching your program than watching the 6 o'clock news on television. So they know the problems. They know that my generation has put $40 trillion of debt on their back. They know that my generation has created and expanded this Social Security monster, and it's already running red ink. And they know that government, my generation has gotten government to expand into healthcare and into higher education to the point where it's beyond affordable for most people. And they've driven the quality of healthcare and health in America down, and education and the value of a college degree down. So they're very well aware of the current situation, and they know, because of the cumulative effect of all that, that is not the government doing the favors. That's the government causing problems. And so I encourage them to be able to learn how to understand what's propaganda and what's not. And of course, most of all, I encourage them to understand how a free market economy works and the theoretical connections which keep it all together and keep it very well regulated without any government intervention, and to realize that a free society is a prosperous society, it's a happy society, and that when you see these signs of financial and economic unbalances.
Thornton finishes on a more optimistic note. Rather than predicting inevitable collapse, he encourages viewers to think independently, understand economic incentives, and question assumptions. Whether viewers agree with his conclusions or not, the interview consistently returns to one central idea: trust in financial institutions and policy matters, especially during periods of rapid change.